Please, let's pray. Our Heavenly Father, we are so grateful for this evening. We thank you for today, and we are praying that whatever we are coming to go through this evening, we pray that it will be so much beneficial unto us. We pray for strength for our facilitator, oh God. We pray that through him, he will minister unto us, that whatever that he is teaching us will stick in our memories. And when we are supposed to give account of it, we can equally do so. In the name of Jesus, I pray. Amen.
Amen. Amen. Thank you very much, Loretta. Thank you. Please, can you hear me? Yeah.
Yes, sir.
Great. So, welcome everyone. It's going to be not too lengthy session, and I'm going to be the chairman for the seminar. All right, great. So without wasting much time, I'm going to call upon a very able resource person who is going to discuss with us the significance or the impact of IPSAS 12, that is inventory, and public sector financial statement. And then he's in the person of Patrick Osekufu. I mean, when it comes to his accolades, they are completely tall. And everyone on the call know how industrious this particular speaker is. So, speaker, please take the floor.
Okay, thank you very much, Grandmaster. It's a great opportunity to also discuss this impactful standard with my colleagues. Colleagues, blessed evening once again. Can you hear me?
Yes, please, we can hear you.
Yes.
Okay.
Yes, sir, we can hear you.
Okay, so
we can hear you.
Thank you very much. This is how we are going to discuss the IPSAS 12. When I'm done, and you have any questions, because this paper is in two sections, how the standard looks like, and a reaction paper on the standard. So we are coming from the academias. Okay, we are going to blend the academia issue with the practical issues being done at the public space. So basically, it's going to be two sections, whereby I'm going to discuss the standard itself. Then, after discussing the standard itself, then we will do the reaction on the standard. Okay, if it's very okay with me, can I hear yes? Then I move on with my presentation. Can I get yes?
Yes, sir.
Okay.
Yes.
Yes, sir.
Okay, thank you very much. So let me share a screen so that since this is not an ICAG class, we are not going to write. We are going to share a screen, then I will deliver. So before I start, I will start with a story, a very nice story. Then I'll start. The story is still about IPSAS 12, where IPSAS 12 talks about inventory, right? I quite remember when we graduated fresh from school. And do you know, when you charter fresh, a fresh chartered accountant, we try to exercise our academia muscles, because we know that we are chartered accountants. And since we are chartered accountants, we know everything, basically, because we are fresh from the CA. So we want to just exercise our academia muscles on other people. Here lies the case. I have a friend, and she works at one public sector institution. Auditors went to visit her to audit. And when the auditors went, we're just fresh from school. So, you know, the euphoria alone, things that we are very good, we are solid when it comes to all the other activities. So this auditors, I think it was, since it's a public institution, is an audit service which audited these people. So when they went, the auditors told her that he's supposed to recognize the stationery that she's using, pen, papers, and all those stationery items on the face of the financials. Not to bore you with a long talk, this lady friend of mine said no. They're supposed not to recognize those pen, papers, on the face of the financials because they are using it. And she was much into IAS 2, which talks about inventory. So he dropped this conversation on our page that this is what the auditors are saying, that the auditors said you should go back. That was 2020. You should go back, and they were auditing in 2022. You should go back and recognize all the 2020, 2021, and 2022, the stationaries that they have used, the pens and papers that they have used, the files that they have used on the face of the financials, quantify it and recognize it on the face of the financials. This friend said no. So she asked that what the auditors are asking, is it correct? Because I'm still arguing with the auditors that what they are saying is not correct. And the auditors stood by their words that no, you're supposed to recognize it. So when they were doing the deliberation on the page, me being biased to IPSAS, I told everyone was saying no, stationery has been used. I said no, you're supposed to adhere to what the auditors are saying. The reason is that the IPSAS 12 talks about something. And what IPSAS 12 do talk about says that we're supposed to recognize all those used items as part of what? The inventory, based on IPSAS 12. Then my dear friend asked this question. Then why am I going to, from 2020 to 2021, how am I going to do that? And I told her that it can be done. The standard is standard. You can't bend it. And as we being accountants, we are not training robot. And since you are not training robot, then you can still recognize those items. And he said, how are we going to do that? And I told her that you're supposed to apply a standard called IPSAS 3, which talks about errors. And all errors supposed to pass through accumulated fund. So it can be done. So she came to appreciate the fact that the standard do not work alone. And we don't know it all. So my dear brothers and sisters, the importance of this standard. Let me start from, that's the story. Let me start from the standard itself. As I told you, we are going to divide the issues into two. We do the reaction coming from academia, then what the standard also states. We know that inventory is the lifeblood of every organization. So for inventory, you can't leave it out of your daily financial preparation. And for every standard, as a public worker who prepare financial statement, when you pick every standard, there are 3 or there are 5 thematic issues that you're supposed to know. The first thing is you're supposed to know the objective of the standard. What is the objective of the standard? The IPSAS 12 that we are coming to explore. What is the objective of the standard? And we say that IPSAS 12 is, or its inventory is the lifeblood of every organization. Bear in mind that inventory being a current asset, and we say that current assets are assets which can easily turn into cash or can be used in the space of what? 1 year. Right. Fast forward, you're supposed to also know the scope, the coverage of the standard. So you know the objective of the standard, what the standard depicts, the specific intention of the standard. Then you know the scope, the coverage. IPSAS 12, what it covers, you're supposed to know. Then you need to know the definition of the items. As it stands now, when we ask you what is inventory, what is inventory? So you need to also know the definition of the standard. Then you need to also know the measurement of the standard. How do we measure? How do we place monetary value on the standard? Then recognition. When you pick the financial statement, because we all know financial statement, it's as one. When you pick the financial statement, where do we recognize inventory? How do we recognize inventory? You're supposed to know the recognition, the things that the inventory passed through so that it can be placed on what? Incorporated on the face of the financials. In public space, how do you recognize inventory? Then disclosure. The last thing that we're supposed to know is disclosure. Where do we disclose? What are the things that we're supposed to disclose when it comes to inventory? We need to disclose the ways that we measured the inventory. We need to disclose the method we used to value the inventory. So the whole standard, when you pick every standard, these are the thematic areas or the things that you're supposed to what you're supposed to know. First one is objective, scope, definition, measurement, recognition, and disclosure. So to walk through this standard, we will first touch on some of these issues. Okay, so that when we try to delve into the standard and how it impacts the financial statement and how it impacts on the government operations and how it also impacts on government machineries. Okay, so by way of we trying to define inventory in a public space, we are saying that inventory can be for sale, inventory can be for distribution, inventory can be held for what? For use. So inventory can be a form of supplies, materials, and any other thing. But bear in mind that let's say a hospital. We are talking about government organizations. When you pick a hospital, they hold inventory for sale, especially the drugs that they sell. IPSAS, which is IPSAS 12, which is not the same as IAS 2, has a different way of valuing and measuring this kind of inventory. So when you pick a hospital, okay, a hospital holds two kinds of inventory. The first inventory that they hold is for sale. That is the drugs. The drugs are also inventory and it can easily be turned into cash. Secondly, they also hold those administrative supplies, materials, the pens, the papers, and other stuff. So the measurement or the valuation of this kind of inventory varies. That's what IPSAS 12 talks about. But for IAS 2 inventory, measurement is done only one way. But for IPSAS, it's not done that way. So that is the sharp contradiction between the IAS 2 and the IPSAS 12. So fast forward, by way of we trying to define inventory, we are saying that inventory, held for sale or distribution, are asset held for sale, distribution in ordinary course of operation, such as medical supplies, as I did explain. Some of the public institutions also hold inventory that they sell. Let's pick this organization. They also hold inventory in terms of production. So some of the public space, they hold inventory for in terms of they're producing items. And the last one is inventory as a form of material or supplies. So this is the major inventory being held in most of the public institutions. Materials. When you pick, let's say, the army, their ammunitions, their all these items. Okay, they are not selling them, but if they are selling them, then it becomes the first method of inventory being held for sale. Again, how do we measure inventory, young man? Inventory, okay, is being measured at cost. And what comes with inventory? Not devoid the fact of IPSAS 17, PPE, because inventory is also an asset. So it tones the same way as IPSAS 17. Okay, so now, if you want to quantify the cost of inventory, the very first thing that you're supposed to take into cognizance is the purchasing price of the item. So if it were to be, let's say, files, printing materials, supplies, the drugs that we are talking about, what is the purchasing price of this item? What is the purchasing price of this item? I hope you are getting it. Then we add all attributable cost. The word is attributable cost. The cost that is directly in line with the inventory. So first one can be if the item was imported, it will be the import duties and any other duties which are directly attributable to the cost of bringing the inventory to use, transportation, handling, Any discount supposed to be subtracted from all these other issues. If there to be trade discount or rebate, okay, all these items supposed to be subtracted from the cost. But bear in mind that the cost of inventory also exclude any waste materials, any waste labor, and any other production cost. It also exclude the storage cost, the place that inventory will be kept. If you are paying for that place, it's supposed to be excluded from the cost. How am I making myself clear? So that is how we quantify, and we also exclude any administrative overhead cost. Any administrative overhead cost, the ECG and the other stuff. Okay, you don't quantify all this as part of the cost of what? As cost of inventory and the selling cost of the item. So if you are selling the drugs at the hospital, the cost of the drugs supposed not to be included as the cost of what? As the cost of the inventory. So that is how we quantify inventory. In my earlier submission, I told you that inventory is the lifeblood of every organization. If you take inventory out, okay, the company will be some way. So inventory is very essential. Inventory is very expedient when it comes to financial statement preparation. Now, we are still on how we measure inventory. I told you that this IPSAS 12 is different from IAS 2 inventory. Now, in IAS 2, measurement of inventory is between lower of cost and the net realizable value. That is how the private people treat inventory. But in the right sense of the standard, IPSAS 12, because most of the public sector institutions are not in the process of making profit, this standard has two ways of what? Valuing inventory, brothers and sisters. The first valuation is one, when the inventory is being held for sale. So if you are selling in the course of activities, let's take a university. If let's say the university is selling textbooks, hospital, if they are selling the medical supplies, then it means that these people are holding the inventory in the sense that they are selling it. So how do you value this inventory? The standard says that we should value this inventory lower of cost and the selling price or the net realizable value. So I'm coming again. We are saying that if at the public space, your company or your entity is holding inventory to sell, like hospitals, the universities that some of them sell books and other stuff, then the standard is saying that this university or this hospital supposed to value the inventory between the lower of cost and the net realizable what? Value. Perfect. But if these people are holding to inventory, which I know that they will also have medical supplies and other items that they are not selling. So if they are not selling the inventory and they are holding the inventory for use or distribution, like NADMO. NADMO holds inventory for distribution, right? Right? Engage me in the chat box, right? NADMO hold inventory for distribution, or they sell them to the beneficial those people. Okay, so if they are not selling such inventory and they are holding the inventory for distribution or for use, in our workplace we use stationary items. I normally pass this jovial comment that, and it's true that at our workplace, people, when you send documents to students, they will use their office printers and office, how do you call it? A4 sheets to print the papers. And I normally tell them that it's fraud because you have two types of fraud. And when in accounting, when you talk about fraud, okay, you are talking about money missing. So when you use papers at your workplace, without the right authorization is fraud. Where we are seeker. You have caused financial loss to what? To the institution. In what sense? Because we have two types of fraud. Financial statement fraud, that is you trying to cook the books, and misappropriation of what? Asset. You have misappropriate asset. Right. That is my next seminar. Will be a reaction on the myth or fact, whether auditing is supposed to have findings. Is it a max that an auditor is supposed to always get a findings? Is it a myth or is it a fact? That will be my next seminar, and I would love you to join. It will be a very nice seminar. Okay, is it that every audit, when it comes to audit, is it a max that auditor is supposed to find supposed to get findings? Okay. Okay. So now, if they are holding this inventory to distribute or to use, the standard says that we should value those inventory, okay, between lower of cost and the current replacement cost. So the first one, if they are selling, is what? Lower of cost and the net realizable value. But if they are holding it for use and distribution, then they are not getting any proceeds out of it. That is IPSAS what? IPSAS 23, non-exchange transactions. Okay, IPSAS 9, exchange transactions. So if you are not getting any IPSAS 9 out of that, then they are holding it in order to use. The standard says that we should use lower of cost and the current replacement cost for assets. So these are the two ways of what we trying to value inventory. Try to value inventory. Is it okay? If it's okay, engage me in the chat box. Engage me in the chat box. Engage me. If it's okay, engage me whilst I move on. Whether you are following, engage me in the chat box. Whether you are following. Okay. Now, let's try and talk about the cost determination methods. When it comes to inventory, we have 3 methods that we use to determine the cost of inventory. We have 3 methods to determine the cost of inventory. The first method, we call it FIFO. They call it what? FIFO. Okay, the one that you people call it FIFO. FIFO. Then the next one is weighted average. Then the last one is what? LIFO. So the 3 methods, FIFO, LIFO, and what? Weighted average. But look at my slide. At the LIFO, we have written that it's not permitted. So the standard says that we should forgo LIFO. Why? In the right sense, in the right procedure, it makes sense. Why is it that the person who came last supposed to go first? Does it make sense to you? You just think about it. The item, the FIFO simply means that last in, first out. The person who came in last supposed to go first. You can really understand. Engage me, will you understand? Will you understand that the person who came in last supposed to go first? So in the right sense of the standard says that we should not permit what? LIFO, but we should always concentrate on what? FIFO and what? Weighted average. But let me shock you. The shocking news is that government of Ghana says that we should use weighted average. So government of Ghana has adapted only weighted average way of what? Measuring what? Inventory. Okay, so government of Ghana says that we should leverage on what? Weighted average method when it comes to we trying to determine the cost of what? Inventory. Now, fast forward. Now, fast forward. I told you that you're supposed to work through some thematic areas when it comes to the standard. So this presentation will be in 2 folds. The first section will be the standard itself, what the standard says, and the second one will be the reaction paper on it. Now, the disclosure. The disclosure, we're supposed to, what are we disclosing when it comes to the standard? What are we disclosing? Then, when I'm done with this, then I will tell you how the standard is supposed to be treated in our financial statement. Then we close the chapter on the standard itself. Then we move on to the reaction paper on it and its impact on the financial statement when it's not being treated. Now, since we said that you determining the cost supposed to be leveraged around FIFO and weighted average. Government of Ghana has accounting policy. So you're supposed to know your accounting policy. IPSAS 3, the accounting policy. So government of Ghana has adapted what method? Weighted average. So we're supposed to, in our disclosure, we're supposed to disclose that. Okay, the method being used for valuation of the inventory is weighted average. And how did we value the inventory? Was it lower of cost, or was it lower of cost, less realizable value, or was it lower of cost, less what the other one, lower of cost, less lower of cost and current replacement cost. Sorry about that. So what is the accounting policy on that? So if the policy that you use for the valuation must be disclosed. So the valuation is the two items, right? That is the valuation. So you're supposed to disclose in your note to the account under IPSAS 12. Give us details of how you value the inventory. Don't leave it that way. And it is very good that now the Controller and Accountant General Department, who is the accountant of Ghana, has given all the accountants to adhere to IPSAS preparation of financial statement. Accrual basis was adapted based on government of Ghana. It was fully adapted in 2023, and IPSAS was also adapted in 2024 through implementation. It has passed through the mail, and now it is here with us. So you're supposed to know the standard as being accountant and how to deploy same. Okay. Again, when you know by way of disclosure, you're supposed to know the policy. After knowing the accounting policy and knowing the method and also knowing the valuation of the financials, okay, you disclose it. Okay, it is lower of cost or the net realizable value. Okay, so basically that is that in between, because you are not writing, that is the main issue. Now, then you're supposed to also know the carried amount. What will be the carry amount? Here, the carried amount that is supposed to be recognized on the financial supposed to be the closing stock. Supposed to be the closing stock. When you are valuing the inventory, the closing stock. So the closing stock will be between the valuation that you did. Which one is lower? If you are selling, you do analysis with the net realizable value and the cost, the initial cost, that the historical cost. Which one is lower? Then you pick the lower one. That becomes your what? Your closing inventory, which is supposed to be your carrying amount across. Now, watch this. How do we treat it? How do we recognize it in the face of the financials? One, the recognition, as I told you, is you trying to inculcate, you trying to bring on the face of the financials a figure. And the figure is supposed to meet the definition of what? The definition of the standard. Or if it's an asset, it's supposed to meet the definition of what? The asset. So inventory is an asset. So since the valuation is done, does it meet the definition of asset? Correct. Does it also follow the qualitative characteristics of what? The financial statement preparation? Correct. If it follows all these issues, the standard is saying that then you less the inventory, which is the closing stock, from your goods and services. Then the closing stock becomes your, how do you call it, asset on the financial position as current asset. Or the best treatment, you started with an opening inventory. So you start with an opening inventory. You add all purchases being made within the year. Then you less your closing stock. The available goods, okay, becomes the one that you are supposed to add to your goods and services as what? Your consumption. That is what you consumed. So I'm coming back. It can be treated in two ways. The first way is that when you get your closing stock by way of what? Valuation, you spend that figure, okay, by lessening it from your what? Your goods and services as an expenditure item when it comes to statement of financial performance. Then the same closing stock becomes your asset on the financial position as your closing current what? Asset for inventory. The second method. The second method is one, you have your opening stock or your opening inventory. So your opening inventory will come. You add your purchases, whether supplies, whether drugs, or whether anything that you purchase within the year. When you are done with the valuation to ascertain your closing stock, you less your closing stock. So after lessing closing stock, the item that you are going to get becomes the consumption or the item that you consumed within the year. So your consumption supposed to be added to your what? Goods and services as a part of your what? Expenses. Then the closing stock that you less, so the figures won't be the same, but it will still balance because of the treatment. Then the closing inventory will push to your financial position. Then it becomes your current asset. That is what the next item try to explain. Expense recognition and inventory written down. So the inventory written down becomes the consumption that you consumed, and it's supposed to be treated as what? As expenditure. It's supposed to be treated as what? Expenditure. So these are some of the issues when it comes to the disclosure of the standard. And inventory is very essential and very prudent when it comes to this. Now, before we start the reaction, people, when this recognition is done, you know that these papers that we are buying, these supplies that you are buying, these drugs that we are buying at our workplace, all these items supposed to feature on the financial statement, so that because we purchase them with cash, monies are living. So we're supposed to know whether we are selling them or whether we are using, how much do we consumed. But if you are, let's say, a hospital and you hold these two inventory, you're supposed not to use one method to value this inventory. No. Use, if the drugs, you are selling the drugs, use the appropriate method for valuation. The stationary supplies that you are also using at your workplace, also use the appropriate method for its valuation. When you are done, you can put the inventory, closing inventory items together for what? For proper recognition on the face of what? On the face of the financials. By way of trying to draw the curtains down on the first section, if monies are leaving the organization, government is supplying a huge printing machinery. When you pick the financial statement of some of the public institutions and you see the purchases being made for papers, pens, and the rest, and if recognition is not done on the face of the financial statement, you just tell me, huge amount of monies. Let's pick a public institution which have offices across the country, and give me example of a public institution who have office across the country. Engage me in the chat box. A public institution have offices across the country. Anywhere you go, any region, all the 16 regions, they have their presence there. Can you engage me? Engage me. Someone say GES. Senate, GES. Engage me in the chat box. Ministry of Health, GRA, ECG, Ghana Audit Service. And these people are purchasing, if these institutions are purchasing supplies, district assemblies, purchasing supplies, and they are not recognizing the supplies on the face of the financials, don't you think that there is something wrong somewhere? So the whole concept or the reaction paper on this financial standard is that if not well taken care of, if not well treated, it means that huge amount of money has been taken off from the financials. We shouldn't even talk about it bringing out, in terms of audit, it bringing out a risk of material financial statement, what risk of what misstatement on the financial statement. Let's try and be practical. Okay, I always say that profit is not cash. Okay, retained earnings are just a fact. Okay, we have a lot of creative accountants. They can cook the books for you. They just want to balance the work, and they'll be excited that the work is balanced. But let's be practical. If inventory, as huge as it is not being recognized as part of what the financial statement, what do you think it will happen? Let's be practical. Let's engage me. Let's be practical. Let's devoid the fact that we want to meet the financial statement with preparation issues, or where the auditors will also say that it's a risk of financial misstatement, or it's a risk of misstatement. Why do you think that? Let's be practical. The huge money is being spent to buy these supplies, to buy these goods, and it's not being recognized as part of our financial activities. What do you think we are doing to ourselves? What do you think? And what will be the impact on the, not on the financial statement, but on the entity itself? What do you think it will be the impact on the entity? Let's talk about the negative impact only. For the positive one, let's leave it. What do you think? Just engage me in the chat box. Just engage me. What do you think? Based on the explanations and the flesh that we added onto it. Poor accountability, lack of donor confidence. Someone is saying lack of donor confidence. So it means that donors are not going to what? Going to donate. If they want to supply items to you, they won't do that. Okay, they won't do that. Poor accountability, perfect. Okay, because I gave you, let's say when COVID came, and I gave you nose masks, too much. And this nose mask issues, it cost a lot. And it didn't quantify this item on the face of financials, or it wasn't being recognized. Okay, it distorts the outcome of what? Decision. Perfect. The value of that entity, someone is saying that the value of that entity will be undervalued. Okay, the institution will only be spending and will not be accountable for it. It will be hard to determine the entity's actual expenditure. Financial breakdowns, perfect. Brilliant idea around the table. So the impact, young man. What is the impact on the financial? We are saying that when you try to value inventory well, someone is saying that we are understating our retained earnings. So here, because we are doing government institution, okay, we won't talk about retained earnings, we talk about what? Accumulated fund. Boss, are you okay? And we talk about accumulated fund. Is that clear? Unless the public institution uses what? IFRS in terms of their preparation, like ECG, like GIMPA, and the rest. I hope you're getting it. Now, what will be the impact if we devoid the fact that this money that we are paying so much, okay, is not being quantified, measured, and inculcated on the face of the financials? We don't take cognizance of all these items. The first issue is that if we are talking about the positive side, if we recognize these items, it enhances transparency. It enhances transparency. So if you quantify, you follow the standard will enhance proper recognition, valuation, and you know that you won't have problem with auditors. No. You don't have problem with auditors at all. Okay. Oh, Ike, I'll open when I'm done. I'll open the floor for any questions so that you can ask your questions. Okay. So you put your question now. When I'm done with the presentation, okay, questions and answers, you just drop your question and you will think about it. Now, when you follow the standard, everything is well recognized, passes through the evaluation and everything, then it will enhance transparency. Okay. You won't have problems with auditors. because if it's not being done, then there's a risk. It's a risk, misstatement risk. So you won't have problems with that. Then it will improve decision making. In what sense, young man? If have you seen the movement that we did? Opening stock, add purchases, less closing stock, you get your consumption. So for proper decision making, we can know that in the year 2024, we consumed stationery, we consumed so much. So when you are making projections for 2025, we can, based on our consumption, to make projections and to make proper decisions. The same thing, some of the supplies are there, so it won't be expedient for us to buy more. But because inventory is not properly measured, valued, every year government of Ghana is buying items. Every year government of Ghana is buying supplies. Every year huge supplies need to be there. And people, you know that the more that inventory is not being measured well, it causes theft. Do you know that? Do you know that it can cause theft? And people will be taking them. Those writing ICAG, doing masters will also be printing. Or don't you know that? Because you are not using them. People will be taking them home. The swivel chairs and other stuff, the supply that they will take them home. And now, engage me. It causes what? Theft issues. Now, for better comparative analysis, we can compare. It approximates. So have you seen the sign there? It approximates what? Decision making. We can compare. Last year we purchased so much, this year we purchased that. And it can also prevent waste. Item that has like wastage, it will prevent what? Wastage. So inventory is very important. Inventory is expedient. Inventory is prudent when it comes to our financial statement preparation. Now, brothers and sisters, uncles, that is a bit about the standard. Let's do the academia issues when it comes to that. Let's do the academia issues when it comes to that. So the reaction paper. And when we say reaction paper in academia, is basically our reflection paper. In academia, all that we are trying to say is that what we as individuals, we think about the standard. When we reflect on the standard, what do we think about the standard? What comes in mind? What is the practical issue that comes in mind? Okay, that is what the academia people want to say when you say reaction paper. What is our reaction when it comes to this standard? Okay, so basically, the standard will also have a lot of challenges, and we are going to discuss the challenges. You come back and discuss the challenges, then we discuss the way forward. Is that clear? Most of the public institutions, okay, don't quantify or value inventory on their face of the financials. And if you don't value, we all know the consequences, right? So what is the challenge when it comes to they not trying to take cognizance of this standard? They're not trying to know that the standard is so important that if it's not being done, the financial statement is not properly prepared. One, the accountants coming, we devoid the fact that we also have valuation challenge. Some of them have valuation challenge. But I know that after this seminar, you have the conviction that now valuation is done in two ways. Whether you are holding it for sale or you are holding it for what? Distribution or use. So you won't have any challenge in terms of which valuation issues or valuation method that we're supposed to use. And we also study that government of Ghana has also adapted the weighted average method system to also cost inventory. Okay, cost inventory. Okay, basically. Now, some of them also say that the challenge is based on the survey that we did. Some of them also say that they have the major challenges what capacity gaps. That is what accountants may lack the training needed to apply IPSAS 12 what effectively. Some of them are saying that, and I know that I quite remember when I was doing a chartered IPSAS in diploma chartered IPSAS. That was 2024. One of the facilitators who came around was part of those who did the nationwide IPSAS training for government of Ghana. And even most of them also even wrote exams and they gave them certificate for the IPSAS, right? So it's a challenge, but this is supposed not to be a substantive challenge when it comes to other issues. Some people also saying that technology constraints or limitations. Many entities rely on outdated inventory tracking systems. So the storekeepers, those who make sure that they keep store, they are also using outdated method system to quantify. So it becomes very difficult for the accountant to even cost the inventory, to even get the closing stock when it comes to that. And the last challenge that we also put together was compliance of cost. So now I told you that we have 3 methods of costing, determining the cost of inventory. The first one, we can use FIFO, weighted average, and LIFO. And I said that government of Ghana, based on their accounting policy issues, they said we should use weighted average to cost the inventory. Okay, so let's do reaction. Let's react on the standard. Let's react on the standard. And what is the reaction on the standard? What is the reaction on the standard when it comes to the financial? We are saying that this standard, okay, plays a critical role in enhancing transparency, consistency, comparability in the financial statement preparation. And as I told you, the thematic areas that you're supposed to know before you even start the standard, the objective, the scope, the definition, the measurement, the recognition, and disclosure. It also takes, the reaction also takes cognizance of this and the challenge and benefit for both. So let's still react on this financials. Based on our reaction, the key issue that we came about, which I've explained already, is how inventory is being held, okay, or inventory are held in terms of our activities. And I told you that inventory is the inventory at public space are being held for sale, distribution, consumption in what? In operations. So if it's being held for sale, what will be the evaluation? Engage me in the chat box. What will be the evaluation? If it's being held for sale, how do we evaluate? How do you evaluate? Engage me, engage me. If you are really following my presentation, engage me, engage me, engage me. We are just reacting on the paper, on the standard. Engage me. How do we evaluate? We are saying that if the inventory is being held for sale, how do we evaluate? Lower of cost and the net realizable value. Lower of cost and the selling price. Perfect. Lower of cost and the net realizable value. Let me know people are following the discussion. Now, the next one, based on our reaction, is that if the inventory is also held for distribution or consumption in operations, how do you evaluate? Engage me. How do you evaluate? How do you evaluate? How do you evaluate? Okay, lower of cost and the current replacement cost for that effect. So that has been our reaction. That has been our reaction, basically. But notwithstanding the fact that the standard also outline some determination methods. And the determination methods, I told you that we have what? We have FIFO, weighted average cost formula, and the LIFO, which the standard now prohibits that we're supposed not to use what? LIFO. And I explained the reason why LIFO do not make sense. The item, the goods that came last supposed to go first. Why? In what sense? I hope you're getting it. Because that is the reaction on the standard. What would be the positive impact on the financial, which we have talked about already. Enhanced transparency, improves. Please, can you hear me? Can you hear me? Can you hear me? A yes will be fine for me. Can you hear me? Okay. So which we have talked about it. The reaction has talked about it. Okay. A standard way of what? Preparing the financial statement and not being what? Wasteful. Not being what? Wasteful. The challenges that we have also talked about it already, which is we are also reacting on the challenge. And we said that the reaction is one, the valuation difficulties. People find it difficult to even quantify the cost. The storekeepers don't have the capacity, the knowledge to what? To man when it comes to costing the items. There is a gap and other technology and other basic what issues. Right. Then let's conclude and way forward. So based on our reaction, what did we conclude on? We are saying that inventory or IPSAS 12 has had a significant impact on public sector financial statement by trying to promote transparency, comparability, efficient inventory management, and other issues. However, we also talk about many challenges, which after this seminar, we are going to read extensively on how inventory is very important, expedient, and we are going to adhere to so that we won't have challenges with the auditors. Always it's supposed to start from somewhere. And starting from somewhere, okay, it's better to get it wrong, okay, at the first stage, and you'll be corrected than not even trying to recognize this item at all on the face of what? Financials. So after this class, you know that inventory is very important, essential. So we being accountants, supposed to take cognizance of we trying to value inventory on the financials. And I told you that we have two types of accountant. Accountant in practice and accountant in business. The accountant in business is the accountants with the entities, and accountant in practice is the auditors. So these two types of accountants supposed to know their stake, supposed to know how inventory is being quantified, how inventory is being disclosed. And the accountant in business supposed to also know the right thing to be done so that you won't get problem with what? The accountant in practice. These are these two accountants that we have. Okay, accountant in practice and accountant in business, basically. So the way forward is that we're supposed to strengthen, okay, public sector financial management by ensuring proper inventory recognition and valuation. However, government must also invest in capacity building, technology, regulatory frameworks to maximize the benefit of what? Compliance. Workshops supposed to be organized so that people will know the essence of what? Inventory, by addressing the challenges that we have tried to cut across. And entities can enhance reliability of the financial statement so that we know that the financial statement is cooked. It devoids from the fact that we don't have any risk of material misstatement in other issues, and leading to improved accountability and better public resource management, because money is our living. Hope you are getting it. And this will foster donor confidence, as our dear brother Alfred said, that if inventory is not properly recognized, even donors won't have confidence in you to even donate anything to your aid. So this will foster donor confidence in government of Ghana and facilitate performance assessment. On that note, brothers and sisters, this has been the reaction on IPSAS 12. And I'm telling you that our next online seminar will be the myth or the fact. Is it a must that audit? Okay, you're supposed to have audit findings after every audit. Is it a must? Is it a must that you're supposed to have audit findings on that? So on that note, Mr. MC, I'm done with my presentation. We'll take a few questions, then we are off from here. I hope the presentation has been beneficial. Engage me in the chat box. Just engage me, engage me, engage me, engage me. So basically, any questions, you just raise your hand, you ask your questions, and we are good to go. Any questions on inventory? Any questions? Okay. Mary, Azuma, ask your question.
Okay, Oman. Good
Yes.
evening.
Evening, madam.
I might say this session has been a very refreshing one, and we thank you so much. My question goes like this about the valuation of inventory. Always, I get stuck at this phrase, lower of cost and net realizable value. If you can please explain that to me, I'll be much grateful. Thank you.
Okay, thank you very much. Yes, the slides will be shared. It will be shared. Now, you remember that I told you that, Mary, for inventory recognition in public sector, we use two ways. The first way is that if you are holding the inventory for sale, like hospital, they sell drugs. So for them, they will use that valuation method or valuation way. So you pick the cost of the inventory. So what is the cost of the inventory? So at the end of the year, we have, let's say, printing papers. As we purchase that, it is 10,000 Ghana cedis. Let's say the drugs, the amount is 10,000 Ghana cedis. But if you are selling the drugs, you will sell it for 15,000 Ghana cedis. So in between the 10,000 and the 15, Mary, which one is greater? Which one is greater?
10,015, 15 is greater.
Greater. So we'll pick the lower one as the closing what? Stock for that drugs. The same thing applies to, let's say, the papers and the stationery that they are using. We are saying that that one will also be lower of the cost and the current replacement cost. So when you quantify the cost of the papers that they purchased at the end of the year, and if you want to replace it in the market, when you go to the market and you want to replace the paper, let's say the cost was 10,000. If you want to replace it, it will cost you 15,000. Which of them is the lower? You pick the lower one. That becomes your closing what? Inventory. Madam, are you okay? Madam, are you okay? Okay. Any questions? Any other questions? Any other questions? Any other question? Yes, Loretta, you can ask your question.
Okay, thank you very much, Oman. Please, can you hear me?
Yes, I can.
Hello. Okay. Thank you very much for the submission. Mine, I don't know whether it's a question or a suggestion. This
Okay.
public sector inventory thing has been a special concern with me because I have realized that now in the public sectors, they are taking us through the capacity building, they're organizing workshops on how to handle the inventories, and then the technologies for us to be able to go through I think the IPSAS 12. The IPSAS talks about inventories in the public sector. They are doing all this. But still, I have seen that it is the workshop monies that they are getting. That is what they are interested in. But when they go to the workshops and they come, they don't implement what they have learned, especially when it comes to procurement. And I would like you to throw a little light on our behaviors. Like we are getting the reactions, we are getting the problems, and we are trying to solve them.
But
But you
then
are not interested in solving the problem. So as a facilitator, and we being your listeners, I want you to throw a little light on the reactions. Like how would the problem be solved?
hey, this is your question. It's a hard question. I always say that
Yes,
accountants are
it's
from
very serious.
accountants are from God. So the best I would
It's
say,
very serious.
is that
Hmm.
since we are accountants and we join a professional institution like we
Hmm.
coming from CA and other stuff, The institution help us to understand that there is what you call ethical code. And the actors, the first thing is, even ICAG, their motto is integrity. And what is integrity? Integrity simply means that you're trying to be honest and straightforward. So behavior, yes, behavior is relative. I hope you are getting it. And behavior can be influenced by, me, I always say that 3 things. The first thing is that, okay, when I went, the people there are doing this. It will have impact on me. Okay. 2, the thing I heard something. And what I heard has also had an influence on me. Okay. And what someone has done to me will also have influence on me. So behavior is very relative based on, this is how I've quantified it. The things we hear, the things we are privy to, and the things that we do when no one is there. So yes, I was summarize it by saying that accountants are from God. Let's stick to the actors, and I think we'll be fine. Okay.
I think it's the actors. Yes. Thank you very much.
Okay, Ampunza and Ike, then we sign out. Ampunza.
Yeah, hello. Good evening to everyone, and thank you, Mr. Presenter. That's a good work. Please, am I being heard?
Yes, please. We are with you.
Okay. So my question is not so much different from the immediate past speaker. Okay. With the valuation, when you talk about the lower of cost and the NRV, then that one we've just explained that. What about when it comes to the lower of cost and the current replacement cost? I'm talking about how do you ascertain the current replacement cost? Most storekeepers or let me say supply officers will tell you, first of all, you're going for invoices to even go through the procurement process. People don't want to give you because they tell you, look, you are not coming to buy from me. Why are you worrying me? So my major issue is how do you get that certified data of the current replacement cost so that you will know which one they are actually supposed to use? Because eventually what they do is they just pick the historical cost, blah, blah. When you ask them, they tell you, Nagana has here, and all that. How do you get that data to say that, okay, this is the current replacement cost? I'm able to put it and say, okay, so I'm choosing the lower of it. Thank you.
Okay, thank you very much. By way of answering this, okay, it's very difficult, as you said, right? When you have a tall list of items in a local balance, you will say that, as you said, invoice ahead. Please, you get it. Please, can you hear me? Can you hear me?
Yes, I am.
Okay. So for that one, it will be very difficult to ascertain the current replacement cost. But if the accountant, by way of doing well, okay, I know my boss will tell you that auditing there, you get it. It's not fight. There should be what you call consensus agidem. And the Latin word means that there should be meetings of the minds. The mind is supposed to meet, right? Since it's not fight, just speak to them. Tell them the right way that, okay, because we want to fulfill the righteousness of the standard, you just go around, get some invoice. Let's know the prices so that you can just do this lower of cost and other issues. But most of the times, they always use the cost, which in my right sense is okay. And I don't know the reason why. Don't know the reason why. Because nowadays, prices of goods are skyrocketing. And what we purchase in, let's say, January or February, at the end of the year, which audits normally take place from January and February going, and it's the public space that will do, let's say, interim, whether we are coming from the private sector. You're supposed to prepare all the issues before we come. So it will be expedient that the initial price, okay, will be lower than the one they are going to ask of. So sometimes let's judge, and it shouldn't be a fight, then we can agree. And I hope I've able to answer your question. Amboza? Okay. Ike. Amboza, I hope I've able to consume your question.
That's fine.
Okay. Okay, Ike, ask your question. Okay, let me pick a question from the chat box if Ike is not talking. He's saying that how will an organization that has both inventory for sale and inventory for distribution show inventory on the face of the file? I said that when I was presenting. I said that the one that they are holding for sale supposed to use the lower of cost and the net realizable value. When they get their closing stock from that area, they use the second valuation to also value. When they are done, then they put together the two closing stock. Then it will be recognized on the face of the financials. KI, correct? Okay. Alfred, Senior Alfred, can you ask your question? Or meet and ask your question?
Yes. Please, can you hear me?
Yes, loud and clear.
Okay. I just want to make a quick addition in relation to the reason why the standard does not permit using LIFO as valuing the inventory.
Okay.
So apart from the fact that literally it doesn't make sense that what you are getting now, you're rather issuing that one first as compared.
Oh, is it his network? Hello, is it his network?